Hello, my name is David Ponder, and I'm a branch manager and a reverse mortgage specialist with Open Mortgage. Thank you for taking the time to view this video to learn about what is a reverse mortgage. Now let's start off and answer that question. What is a reverse mortgage? A reverse mortgage is simply a loan that allows someone that's 62 or older to access the equity in their house and never make a payment on that as long as they live in that property. The reverse mortgage that we're referring to is a product from FHA that's been around since approximately 1989 called the FHA HECM, or Home Equity Conversion Mortgage. So when you see these advertised or hear information, they're probably referring to the FHA reverse mortgage product. Now on this loan, there's some things you need to be aware of, things that to qualify for it, and also things you need to do once you have the loan. Let's start out with the qualifying. Currently, there's no income qualifying and minimal credit qualifying on the loan. You do need to be 62 or older for everyone that's on title to the home in order to take a loan out. You can have a current loan on your property. The property does not have to be free and clear. If you did have a current loan, you could use the reverse mortgage proceeds to pay off that loan. Now, if you get a loan, there's some things that you need to be aware of that you need to do. One is you have to reside in that home. Two, you need to pay the property taxes and the insurance on the home. And three, maintain the home. So those are the key things you'd have to do if you got a reverse mortgage. The important thing to realize is if you got a reverse mortgage is that you would remain on title. The lender does not go on title. They would have a mortgage on the home, but the ownership of the home is yours. So if you want to sell the home later, you can. There's no prepayment penalty on this loan, so you're not going to pay a penalty if you do pay it off early on there. So let's talk about how the loan works. What are the mechanics of the loan? When someone says reverse, a lot of times they don't know what that means. And so just an example, let's say you get a reverse mortgage, and let's say, for example, that you're eligible based upon your home value of $200,000. Let's say you're eligible for $100,000. Just have a round number. So you provide $100,000 to you. Then over time, what would happen is the value of that balance, or the balance on the loan, would simply grow. So that's where the reverse comes into. Since you're not making a payment, your balance increases instead of decreases. Now you retain ownership of the home, and you're going to have your home value, which starts out at $200,000 in our example. What we don't know is what the value is going to do in the future. So if that value goes up and your balance goes up, the difference between the two is always your equity. So the important thing to remember on a reverse mortgage, since you're not making a payment, your balance is going to grow. Now in later videos we're going to talk about what are the pros and the cons, and is this a good idea or not. But for the purposes of this video, I just wanted you to understand what is a reverse mortgage, what does it take to get a reverse mortgage, and what are the things you're required to do. Then you can start looking in answering the questions as what goal am I trying to accomplish? Do I want to keep this home? What do I want to have happen to the home later? What are my options for taking out money on a reverse mortgage? In later videos, we're going to look at those questions and get answers for you. So I wanted to thank you for taking the time to view this video. If I could answer any questions personally, please feel free to give me a call. Thank you very much. Have a wonderful day.